Using a second mortgage for home improvement. Hello, today we are going to talk about the difference between the HELOC and the line of credit. A new survey found nearly a quarter of Americans don't know how much home equity they have. Most equity-rich homeowners don't understand equity loans. Almost one half of all mortgaged residential property owners were considered equity-rich at the end of 2023, according to the U.S. Home Equity and Underwater report from the property and real estate data company Atom. That means they had built up at least 50% equity in their homes, putting them in a good position to utilize it for home improvements. But in an environment of high interest rates, people with lower interest rate mortgages may be unwilling to change the terms of their current mortgage to access that equity. There are other options available, but how aware of these options is today's homeowners? A home equity loan allows a homeowner to convert existing equity in their home into cash without refinancing their primary mortgage. It's a second mortgage, which means an additional payment on top of the primary mortgage, and potentially meaning the rate is slightly higher than if they refinance their existing mortgage. The HELOC provides access to funds much like a credit card. The borrower can draw from a revolving line of credit with a credit limit, and even put funds back in through repayment during the draw period. A home equity loan delivers the funds through a lump sum payment with no draw period, just a repayment period that starts after closing. This lack of home equity loan knowledge may be one reason the majority of homeowners, 71.7%, have never gotten this type of loan. It's believed these loans should be more popular than other financing options because, in a higher interest rate environment, loans secured by a home will receive some of the lowest interest rates borrowers can get for any loan option. So what are they using instead? For projects worth less than that amount, a personal loan can be a good option because they are unsecured. These loans will generally have higher rates than home equity loans, but lower rates than credit cards. Home equity loans and personal loans can be good options for costlier home improvements. But how many borrowers are actually using them? And if they are not using these methods of financing, how are projects being paid for? According to Rocket Loan Survey, this is how they finance at least one of these projects. 61.4% pay for some of all their project's costs out of pocket. 50.4% pay for some of all their project's costs with a credit card. Only 30% pay for some of all their project costs with a HELOC. Only 8% pay for some or all of their project costs with a home equity loan. While other methods of payment include contractors financing, investments, insurance, and refinancing, no one claimed to have used a personal loan. This is somewhat surprising because, aside of financing through home equity, personal loans can be attractive based on having much lower rates than credit cards. The payment is also fixed, where a credit card rate can change every month. Finally, some like that it's not tied into the home, so while it may be harder to qualify, the home isn't at risk. Given the amount of equity available to homeowners at this time, there are likely missing opportunities to use the money invested in their homes to improve its value through various projects. A home equity loan provides the opportunity to capitalize on this without having to refinance their primary mortgage. However, homeowners do need to have enough equity to borrow, and lenders have minimum loan amounts. For smaller projects, personal loans may be utilized. These interest rates are higher than those for loans secured by a home, but they are significantly lower than typical credit card interest rates, occupying an important middle group in terms of financing. Okay, as always have said, I'm going to put all this information in my webpage, so remember to visit my webpage subscribe to my YouTube channel, and visit my Facebook and Instagram pages. Thank you. See you there.